Hello there, this is fairbinaryoptions.com and we are looking at the euro and Australian dollar as still wanting to buy call options. So still thinking this one will go or will still head to the upside. The reason for that is that after the contracting triangle ended here, so with these lows we had the contracting triangle. Let me put this one a bit down here. So after the contracting triangle ended here, as you can see, this is a move that channels too well and corrections are almost the same, so basically hitting to us that it is a corrective move. So after this move, let me try to mark this channel here, something like this. Let's change the color. So after this channel has been done, basically we are looking at an impulsive move that started with these lows here. So you are analyzing the move on the right side of the screen, and basically this one calls for the euro and Australian dollar to keep continuing to the upside. The reason for that is this price structure, this trend line here, and normally price should stay to the upside and above this trend line for quite some time now. If you are counting the waves in with Elliott waves, I would say that the first wave to the upside is going to be this one here, so something like this: 1, 2, 3, 4, and 5, and this to be the first wave. Then here you'll have the first correction here. You'll have most likely the continuation to the upside from now on, and this points towards way higher values. In terms of Elliott waves, if you try to label or to measure the length of the third wave here, so taking a Fibonacci retracement from the highs here and to the lows here, and then the outcome for the fifth wave should fit into this expansion for the fifth wave to come. If price is basically if price basically from here on will keep moving to the upside, it should fit something like into the 100% level here. So 1.50 is the target to the upside. Therefore, this should be 1, 2, 3, 4, and still enough place for the fifth to go. Or I would say even 1 and 2 here, and this to be only the correction for the whole move. So in both cases, we are in a win-win situation, and let me show you actually with the numbers on the screen. So I'm talking about the first wave to be done here. So the first wave actually here. The second wave to be this double 3 running to come here. The third wave to the upside to be this one, so 1, 2, 3, 4, 5. And the fourth wave here, this small contracting triangle, 1, 2, 3, 4. And then of course the fifth wave. And there you go. This is an impulsive move to the upside. 1, 2, 3, 4, 5. And this should be the end of the first wave. But the same structure that I showed you at the beginning of this recording, with that channel, is happening here, but this time to the upside. And as you can see here, if you take a trend line and you try to look at this move here, this is this is channeling too well. Corrections are almost the same, so basically we are looking for a corrective move. This should be labeled as the first correction, the X wave, and the second correction, and that makes that the second wave here ends only here. So as long as this trend line holds, basically we should go for 161.8 extension, and if you take a 161.8 extension expansion from the lows here to the highs here and to this second wave here, you'll have basically 151 and something as the target to the upside. Therefore, buying calls with end of week or end of month expiration date, because this is on the 27th of November, and we're looking for month end flows to come to influence trading as well. So buying buying calls with end of week or end of month expiration date is the logical thing to do, and this is what we are doing right here, right now, on the euro and Australian dollar. You might say, oh my god, it traveled too much. Well, it still has a lot to travel, and this is our analysis. Thank you for being here. This is fairbinaryoptions.com, and all these analyses are possible due to the help of our general sponsor here, Lion Eye.